End of the tax year Vanguard portfolio update. It is coming up to the end of the tax year in the UK, and it's quite an important time in the UK financial calendar and world. One reason being because a lot of the tax-free allowances that we get, a main one for me, and hopefully for you if you're also investing, is the £20,000 ISA allowance, which we get each tax year, and that doesn't carry over. So we've got to use up the allowances like a lot of the other tax-free allowances as well, the dividend allowance, the capital gains tax allowance, and so on. Got to use them up or we lose them. In this video though, I'm going to be going through my Vanguard portfolio update as of the end of March, the end of the tax year for 2023. We're going to be going through how much of my ISA allowance I actually used, what investments I made in the last month. I'm going to be looking at my performance over the last sort of tax year and seeing how well I've done, because I've done the same thing last year. And finally, we're going to go through all my investments and all that good stuff that we always look at in these Vanguard portfolio updates. And if you're not aware, I have both a Stocks Shares ISA and a SIPP, and we're going to see all the investments I've made in those two accounts this month, the actual investments I've got and the actual amount I've invested. Completely transparent, hopefully help you out, help your own investing journey. At the time of recording as well, Arsenal are still top of the league, so it's probably my happiest end of tax year to date.
What are you saying now, blood? Yeah?
And hopefully it stays that way for the rest of the season. But first of all, let me get into my portfolio update, and my current total Vanguard portfolio now stands at £41,026.76. That money is split roughly 36.5 grand in my Stocks and Shares ISA and 4.5 grand in my SIPP, my private pension. We're going to dig into these accounts a bit more, look at their performance and the actual investments and transactions I made shortly. But first of all, let me just look at how much of my ISA allowance I used up in this tax year, the 2022-2023 tax year. So I used up £13,213 of my £20,000 ISA allowance, which roughly equates to 67% of the total ISA allowance. Unfortunately, I've still never utilized the whole 20k that's on my bucket list, but to be able to invest that much across the year, I'm very fortunate, and yeah, I'm very happy ultimately to have invested over £13,000 in my Stocks and Shares ISA with Vanguard in this tax year. A big chunk of that though came from a large lump sum payment I made right at the end of the tax year, which we're going to come on to in a sec when we look at my transactions, and I can explain more about that. As I sort of alluded to at the start of the video, we get a £20,000 ISA allowance that can be used for your Stocks and Shares ISA, for your cash ISA, for your lifetime ISA. For me, I only really use it for my Stocks and Shares ISA. I funnel as much money as I can from my net pay into this as possible. And the key thing is, if you don't use up any of this allowance, it doesn't carry forward, which is why ultimately I try and use up as much as possible each tax year. I think in the last tax year I used up a similar amount. So yeah, I'm very happy with that sort of ISA allowance usage in the tax year. One day I will get to a £20,000 note and max it out. And I'll have a pint of Guinness when that day finally comes. Now, let me show you the actual transactions that I made over the last couple of months. Is a bit different to usual. If you have watched these videos in the past, you know I put 650 into my Stocks and Shares ISA and then 400 into my SIPP every single month, pretty religiously, and I've been doing that for months and years, especially my Stocks and Shares ISA. So in February, as you can see on the screen, I made the transactions like normal, but March was a little bit different. As you can see, I put about £5,512.44p in lump sum payments, not a regular payment. This essentially was a dividend that I took from my company, Making Money Simple. I paid myself and I invested into my Vanguard Stocks and Shares ISA. I've been very lucky now. This is the second year that I've been able to do this in a row. My approach essentially is take a dividend from my company, set aside a portion of tax that I will need to pay additional tax due, income tax, student loan, all of that stuff. I then, in the previous 2 years I've done this, have given my family a bit of the money, and in the bulk of the payment, what's left, I then give to myself and essentially invest 100% of that money. So that 5.5 grand there, what you can see is essentially money that I paid myself and then invested into my Stocks and Shares ISA through money that I've earned through Making Money Simple over the course of the last year. So I'm very happy and fortunate to have been able to do that 2 years in a row. Last year, I think it was around £4,750 that I put into my Stocks and Shares ISA on deadline day, right at the end. This year, it's about 5.5 grand. Hopefully next year it's even more, but I'll have to see what happens. I then made my 650 automatic payment like usual into my Stocks and Shares ISA. I didn't make my £400 SIPP monthly investment for March, as you can see, and that's ultimately because I invested quite a lot of money this month. I invested, over £6,000 between those 3 transactions, which is a serious amount of money for me, and that's nearly like 10% of my entire portfolio. So it's a lot of money to be invested in one go, but also from next tax year, now that I moved to Australia, I can no longer contribute to my Stocks and Shares ISA. So that's why I've chosen to funnel as much money as possible into it. Another reason is because with a Stocks and Shares ISA allowance, as I've said already, if you use it or you lose it. So I'm trying to use up as much as I can, because when I get to the 6th of April, anything not used is losed. Whereas with pensions, it is like a little bit different. You can use up the last 3 years worth of allowances. So they do sort of carry forward to some extent if I wanted to contribute more to my pension than the £40,000 allowance next tax year. Of course, I'll contribute nowhere near that, but they still do carry forward to some degree. Now we're gonna look at my actual performance year to date and also across the entire tax year, and then finally dig into the account and see my exact investments and how much I've grown or fell by. First of all, year to date, my portfolio is up a whopping 0.74%. Not particularly promising. Let's now take a further step back and look at my yearly performance across the tax year. Across the 2022-2023 tax year, it's even worse. I've made a miserable minus 4.18%. As you can see, I contributed a decent amount, nearly £18,000 across my SIPP and my Stocks and Shares ISA. However, my investments actually made a loss of around £1,300, so I ended up being down just over 4%. Now, I've talked about this in a lot of videos. I won't get too much into it. I can even make a whole video on this if you want me to, but the negative return really doesn't bother me at all. If the market goes up, it's great for me. I'm making money on paper. If the market goes down, it's great for me. I'm investing at lower prices, and hopefully, as I'm only 25, we'll make long-term gains for years to come by investing at these lower prices. Of course, it's not nice seeing your portfolio being down, but I think because I've now been investing for nearly 5 years, I don't really get as emotional or as sort of invested, maybe pardon the pun, as much as I used to. I'm down a little bit year on year. It's not the end of the world. If you're down on your own investments, you know, some things to think about. First of all, think long term. Second of all, investments, all the money really is made in the long term with compound interest, being patient. So if anything, view it as an opportunity to try and invest even more, to invest at lower prices, to hopefully make more long-term gains. I could probably make a whole video on the psychology of money and your portfolio being down and how to handle it. If you want to see that, just let me know and I'll try and pull something together. But yeah, that's my performance over the last tax year. Leaves a lot to be desired. Hopefully the coming tax year will be better. It is worth bearing in mind though, to be fair, over this last tax year, interest rates have skyrocketed, inflation's been very high, and for the stock market to only lose 4%, it's not terribly going, not the worst thing in the world. Of course though, when you factor in 10% inflation, in real terms, I've actually lost 14%. We'll try not to think about that and just focus on the long-term thinking, investing while the market's down, and hopefully compound interest and time will do the rest and eventually make us, you know, stock market millionaires one day over the long term. So looking at my specific accounts then, in terms of my Stocks and Shares ISA, I have one fund, the same fund as always, the FTSE Global All Cap, and I've made just over £700. Once again, put this into a bit of context, this has been 4.5 years worth of investing. So you can see that's literally nothing made at all. If you told me 4.5 years ago I'd only make £700, I wouldn't be very happy. Now that I'm here, the thing that I'm looking at most of all is that total cost. Over those 4.5 years, I've managed to get that much invested, and if I can keep doing that over the next 4 years and next 4 years, then one day, I promise you, compound interest hopefully will take over and do the heavy lifting for us. They always say the first 100K is the hardest. Of course, that's not that much money, £700, but that's the way the stock market goes. It ebbs and it flows, and of course the last few years with COVID, with interest rates, with inflation, it's been with the Ukraine war, it's been difficult, and that's clearly reflected in this stock market performance. My SIPP is actually down £25. I've been using this now for nearly a year, since about May 2022, and once again, it's the same story. I'm not gonna get too emotionally invested. It's not nice seeing you losing money, but it's all about the long term. Beating that sort of like a dead horse, but hopefully, if you're also down, you can take some comfort in that, yeah, it just happens, it's the stock market. It's all about thinking long term, being patient, and carry on contributing what you can afford to every month. But yeah, that pretty much wraps up this end of tax year Vanguard portfolio update. Let me know how your portfolio is doing and has done over the last tax year in the comments below. If you're gonna make any changes next tax year, new provider, new platform, new investments, let me know again in the comments. We'd be interested to discuss that with you. But thank you very much for watching, and I'll see you in the next video.